Good morning, Dark Gamma community. Today is Tuesday, March 31. SP 500 is trading at 6,397 with a bullish gap of 0% above yesterday's close.
That gap of 0 points confirms overnight buying pressure. Max pain sits at 6,675, so keep that level in mind.
The expected move for today is plus or minus 59.7 points, giving us a range from 6,337 to 6,457.
On the sector side, industrials is leading, while communications is under the most pressure.
Stay sharp, watch those key levels, and let's see how the open develops. Let's go. On today's macro calendar, the main event is consumer confidence at 10:00 a.m., consensus 88, previous 91.2. Additionally, 3 Fed speakers are scheduled today.
There are 5 more events during the session. These releases could drive volatility at the S&P 500 open.
Want to see exactly what institutions are doing in the market in real time? Then this is for you. Exclusively for members of the Dark Gamma community, the SPX trading platform is currently in beta, and access is completely free until the official launch. Go to the link on screen, sign up, and in the discount field, enter the code shown on screen to also activate 1 free month on the institutional levels bot tool. From the platform, you will see the complete market X-ray, institutions trading live, liquidity zones, points of interest, unusual positioning, everything that moves the price of SPX visible on your screen in real time. No prior experience needed. Just get in, explore, and start seeing the market the way institutions see it, like you never have before. Take advantage of this access before it closes.
Across the board, the Magnificent Seven are all trading higher pre-market, painting a broadly constructive picture for the tech sector heading into the open. The moves are relatively tight in range, from just over 0.5% on the low end to nearly 2% on the high end, which suggests steady institutional accumulation rather than any single catalyst.
Meta is leading the pack, up 1.76%, followed closely by Microsoft at 1.62%. Both names are drawing buyers likely rotating into mega-cap tech on risk-on sentiment. Tesla is the clear laggard at just 0.54%. Which isn't surprising given how stretched it's been and the lack of a fresh narrative to sustain momentum.
Worth noting that the geopolitical backdrop isn't entirely clean. Iran is reportedly seeking Houthi cooperation to press its advantage in the Red Sea conflict, which keeps energy and shipping risk elevated. That said, the market appears to be compartmentalizing that risk for now, with money flowing into growth and tech rather than defensives.
Nvidia at 0.87% feels modest given the AI tailwind still in play, but with open interest heavily concentrated around near-term strikes, traders may be hedging into strength rather than chasing. Overall, the tone for the tech sector looks constructive, but the narrow leadership from Meta and Microsoft suggests selectivity is the name of the game today. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere. There's your invitation. I forgot to mention that both Billy and I are there with you in real time with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
Leading today's pre-market session is TD SYNNEX in the technology sector with a market cap of $12.9 billion, a beta of 1.08, and an expected move of 2.9%. FactSet Research and Palvella Therapeutics are also reporting this morning with expected moves of 4.2 and 5% respectively.
After the close tonight, all eyes shift to Nike, the consumer cyclical giant sitting at $61.1 billion in market cap with a beta of 1.13 and a notably wide expected move of 7.3%. Nuve Holding and Edible Garden AG also report after hours but carry negligible market weight.
Turning to tomorrow's pre-market, Conagra Brands leads the consumer defensive session at $7.5 billion in cap, a very low beta of 0.13, yet a surprisingly elevated expected move of 4.8%. Lamb Weston and MSC Industrials are also on deck, with Lamb Weston carrying the most dramatic expected move of the group at 10.4%.
After hours tomorrow, Penguin Solutions tops the list at $854 million in the technology sector with a high beta of 1.78 and an expected move of 6.3%, making it the most volatile name of that session. Basit Furniture and Nauticus Robotics round out the evening with smaller caps and limited broader market impact.
The Qatar statement calling for restraint on energy and nuclear infrastructure is the headline that could really set the tone at the open, because it signals the situation in the Middle East is dangerously close to escalating into something that directly threatens oil supply chains.
Absolutely. And layering on top of that the Iran and Houthi coordination story, we could see energy names gap up while the broader SP 500 faces selling pressure as risk appetite contracts in early trading.
The options market is going to be interesting to watch because any spike in volatility overnight will have inflated 0 days to expiration premiums, and dealers managing gamma exposure could amplify moves in either direction off the open.
On the other side, the JD.com Singapore REIT story gives us a glimpse at continued appetite for Asian capital markets listings, but with open interest in defensive sectors likely building, I would expect rotation out of tech and into energy and utilities as the dominant theme today.
Looking at the SP 500 with spot at 6,397, the nearest call strike with notable activity is 6,500, where open interest surged 2,285% overnight to 7,180 contracts, signaling aggressive new positioning just above current price. That massive inflow of call open interest suggests traders are defining resistance right at 6,500, and a gamma exposure buildup there could act as a ceiling for today's session.
On the put side, the nearest meaningful strike is 6,000, where open interest jumped 166% to 11,127 contracts, which points to that level serving as key support and a potential floor if selling pressure picks up. The fact that put open interest is being added closer to spot while call open interest is exploding just 100 points above tells me the market is getting squeezed into a fairly tight range today.
The put-to-call ratios across all three near-term expiries are heavily skewed toward puts, with the March 31st expiry showing a ratio of 1.848 across over 1,200,000 contracts in total open interest. That degree of hedging activity reinforces a cautious tone, and with max pain sitting way up at 6,675, there is a significant gravitational pull higher, but the open interest flow today is not confirming upside conviction.
Bottom line, watch 6,500 as the primary resistance given its extraordinary overnight open interest build, and treat 6,000 as the near-term support floor backed by fresh put positioning. Any break below 6,000 on elevated volume would likely accelerate selling given how much open interest is clustered at deep downside strikes like 5,300, where multiple series saw open interest growth of over 4,000% overnight.
Dealers are likely buying dips and selling rips in this range, which tends to suppress volatility and keep price action relatively contained.
That could accelerate a move toward the 0 days to expiration call wall at 6,435, which is where the heaviest call open interest is concentrated and often acts as a ceiling on expiration day.
So for the open, we are essentially sandwiched between 6,390 on the downside and the gamma flip at 6,418 as the first real upside trigger.
Traders should watch those two levels as the defining boundaries for 0 days to expiration price action today.
Let's look at the levels where institutional players have concentrated the most liquidity. In the annual analysis, the dominant level is the 6,460 level above current price, with maximum liquidity concentration over 14 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for SP 500.
Over the past week, the level with the highest active liquidity is the 6,352 level, below current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Breaking activity on the institutional options scanner today, with 18 large entries flagged across the board. The headline flow is concentrated in mega-cap technology, and the positioning is overwhelmingly directional. We are looking at calls across every single notable entry detected this session.
That is correct, Samantha. Microsoft is drawing the most attention, appearing twice in today's scan. The first entry is a call at the 575 strike, expiring December 2026, with a premium of $45.78 million and nearly 25,000 new contracts in open interest, executed at 75% of the ask. The second Microsoft entry targets the 405 strike, expiring May 2026, adding 35,980 new open interest contracts at a premium of $10.49 million, with execution at 97.3% of the ask. That is nearly a full ask print, which institutional desks tend to flag as aggressive.
Amazon also registers a significant entry, a call at the 225 strike dated June 2026, carrying a premium of $17.24 million and close to 24,000 new contracts, printed at 98.5% of the ask. That is essentially an at-ask execution, Billy, suggesting urgency in the positioning. Taiwan Semiconductor rounds out the top entries with a call at the 340 strike expiring April 2026, $14 million in premium, and over 9,000 new contracts at 85.2% of the ask.
To summarize the picture, all four highlighted entries are calls. All expire within a 12 to 18-month window, and the sector concentration is entirely in technology and semiconductors, Microsoft, Amazon, and Taiwan Semiconductor. Total premium committed across these four entries alone exceeds $87 million. On the confirmation side, no previously detected contracts crossed the 20% open interest increase threshold today, so fresh positioning is the dominant story. We will continue monitoring these levels throughout the session.
Breaking news here on Dark Gamma. Our institutional flow scanner has flagged a significant new contract entry today on Microsoft, ticker MSFT. The position involves a call option at a strike price of $575 with an expiration date of December 18, 2026. Total open interest on this contract currently stands at 228,989 contracts, with 24,993 of those representing new additions detected at the time of the scan.
That is a substantial flow, Samantha. To put the volume in perspective, the scanner registered 200,129 contracts at the time of detection. The institutional average entry price on this contract came in at $2.29 per contract. When you multiply that across the full premium registered, we are looking at a total of $45.8 million committed to this single options position. That is the kind of number that draws serious attention from our flow monitoring systems.
And here is an important data point for our viewers to understand from a structural standpoint. The current contract price as of this report is $2.30, compared to that institutional entry price of $2.29. That is a difference of just 1 cent. On Dark Gamma, when our scanner identifies a setup where the current contract price is at or very near the original institutional entry price, and open interest is flat or growing, that is what we classify as an active and intact institutional position. In this case, open interest is growing, with nearly 25,000 new contracts added, and the price has barely moved from entry.
Rounding out the data picture, the underlying break-even price for this contract at expiration is $577.30 per share of Microsoft. That is the price level at which this contract reaches its cost-neutral point based on the registered premium of $2.29 added to the strike of $575. We will continue monitoring this position for any changes in open interest or premium movement. Stay with Dark Gamma for ongoing institutional flow coverage.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.